Great to be with you, Yvonne. I mean, what we know so far is that the world's most indebted developer said that it expects to have a restructuring support agreement ready by the end of the month. Apparently, it's won preliminary support from a group of major creditors. Initially, in the filing with the court on Monday in Hong Kong, it suggested the terms would be released today, but as of yet, we haven't seen them. So this progress, however, has allowed for the adjournment of the case in Hong Kong to July 31. This has come after Evergrande has delayed many self-imposed deadlines to try and have a plan for its restructuring. So at least we're seeing some progress. That said, we don't know the details, as you note.
As you say, there have been several delays in announcing this restructuring plan. Why has it taken this long to plot out since its collapse in 2021?
You know, this is a milestone to some extent. Essentially, we're in a unique territory here because of the size and the complexity of Evergrande and its debts, and of course because of the outside impact that it has had, not just on the China property market, but of course, given the international bondholders and creditors and the junk bond market, the influence it's had. So I think, you know, when we started this process, there was a lot of speculation whether the government would scoop in to rescue Evergrande, whether it was too big to fail. And at the time, we sort of said it's too big to fail completely. And essentially, that's what we're seeing, that we've seen just enough kind of delays and processes. And it's actually this court case in Hong Kong that has kind of put more pressure on the property developer to come up with a plan.
And Mattie, as you say, it's had a massive impact globally. To what extent has Evergrande's default impacted China's economy and how it's recovered since?
Well, it's certainly contributed to the woes in the China's economy last year. Between the property sector crisis, where you saw, you know, the property market experience its longest and deepest sustained loss since its housing reform in 1998, and we at the Economist Intelligence Unit estimate that property-related drag totaled about 1.6% of real GDP growth last year. So it's been quite significant. Of course, it wasn't the only kind of headwind facing China's economy, but it also was really one of the big contributors to kind of the decreased consumer and investor confidence in China. Zero COVID, of course, being the other one. But an astonishing 70% of household wealth in China is caught up in real estate. So it was not only kind of economic woes, but it was a real threat to kind of social stability as well.
Well, President Xi Jinping's economic team is now in place. What are its priorities?
What we're seeing from the team as Xi heads into his third term is really a focus on shifting China from a prosperity economy to a national greatness economy, shifting from kind of a growth at all costs mentality to a growth, yes, but growth tempered by security. China feels it's facing an increasingly hostile external world, and it wants to unlock new and more sustainable sources of growth, not, for example, relying on an overly inflated property sector or exports to charge growth, but unlock growth from within and insulate itself from a challenging external environment.
Well, what has been the reaction to the plans that have been put in place to facilitate economic growth?
You know, it's a little early to say because we've just had the two sessions, the legislative season close in China. It's clear that the policymakers want to signal, of course, that China's back to business. There was some important language about China being open to foreign direct investment, the role of the private sector, etc. But I feel as though, you know, for the same reasons I just mentioned, the way in which both foreign investors, multinational corporations, many people kind of hit the pause button on China, and Chinese companies are not immune from these headwinds either. So I think there's a question to sort of see whether the recovery and the rebound that we've seen in the start of the year in China will continue, and whether, for example, increased levels of consumption will continue, and of course whether the goals for innovation, particularly in line with some of China's strategic priorities, will be able to be achieved.
Meanwhile, Mattie, how have Asian markets felt the impact of the SVB and Credit Suisse collapses?
You know, so Asia is insulated but not immune from the kind of Western banking instability. You've seen regulators across Asia, including in Hong Kong and Singapore, issue statements this week, kind of reassuring the stability of their banking sectors. Asia's banks are well insulated. However, the collapse of Credit Suisse and, of course, Silicon Valley Bank, Signature Bank, were ultimately the result of a fall in confidence by investors and depositors, and none of those institutions had a significant footprint in Asia, so that's important. As such, there's not really a direct financial channel for contagion. There is significant scope for indirect impacts, however. Bank capital adequacy ratios are generally healthy across Asia, and the region's major banks are largely funded by domestic deposits. However, where there's more systemic risk are in areas where you have more globally integrated lenders, so that's banks, for example, in Australia and New Zealand, of course, they fall within this category, although in both cases, local regulatory systems are quite strong.
Mattie Bekink, always great to have you on the program. Thanks so much for your time.
Thank you.